Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition on discussing everything that you need to know about gold and silver, the outlook for both the precious metals and how the record-breaking run has turned out, and now there are prices which are turning volatile. So what goes next for gold and silver is something that we are going to be discussing on this show. After this record-breaking run, gold and silver prices are seeming like they are taking a breather. The yellow metal is set to end its 9 consecutive weeks of gains with now a weekly drop. Remember, international prices right now are hovering at around $4,100 per ounce. It is already down by 3% this week, and this will be the sharpest fall in a week that we would have seen since May for international gold prices. Also, this comes in right after an exceptional period for gold prices that have seen an over 60% surge since the start of this year as well. In India, the MCX December gold futures right now are trading lower by about 1% at 1,23,222 rupees per 10 grams, whereas silver has also seen a decline of 1.5% to trade at around 1,46,360 rupees per kilogram as well. Now, the question is, why is the gold and the silver rally really weakening, and what is the outlook for gold and silver prices? Let's welcome our guest on board, Navneet Damani, Senior Group Vice President, Head of Research at Motilal Oswal Financial Services. Welcome to you, Navneet. Good to have you with us. Well, after this entire sparkle of gold and silver that we have seen all across this year, and especially in the run-up to Dhanteras and Diwali, finally after Diwali we are seeing some cool off in both gold as well as silver prices. Now what we want to try to understand is, why are the prices falling? Is it a profit booking, or is there more to profit booking on gold and silver right now?
Well, absolutely. They've had a spectacular run this year. About 60% gains for gold and about 80% goals for run up for silver is what we've seen over the last, say, 8-10 months. And what we are going through currently is a kind of profit taking, I would say. Now, actually, gold and silver came into limelight largely because of the percentage returns they had given and the short span of time which the percentage returns were delivered. And today we are discussing exactly the same thing, that this kind of fall or the ferocity of the fall is also something which is concerning to people who bought in off late. So I would like to reiterate that there is no major macro change in fundamentals. There is only some profit taking because gold typically was moving like a mid cap stock, silver was moving like a small cap stock, and typically there are bouts of profit taking which happens in this kind of a scenario, and which is what we are going through. The backdrop remains same. Silver and gold supply side story remains troubled. Demand side story remains very positive, and central banks are buying gold left, right, center. Only thing is that what we've seen till $4,000 was typically what people had digested. Anything below above 4,000 to 4,400 was kind of an exuberance or froth getting built up, a FOMO kind of effect which we discussed just before the Diwali episode also, and this is what has now been gone off the table. Some profit taking has been taken off the table, and eventually once this quarter number comes out with what kind of buying has happened from the central banks over the July to September quarter, then we will have greater clarity that what is the pace of central bank. Are they still comfortable buying at gold at higher prices, or even are they taking a breather? But overall, not much has changed. It is only a fear psychosis and some profit taking which is happening in these kind of.
Absolutely. So, Navneet, I would want to understand from you, since you do say that the fundamentals are intact, the backdrop is absolutely same. This is profit taking after, a sharp, swift run up that we have seen in both gold and silver prices before this. The question comes in, should investors who have been facing a lot of FOMO, who have missed out on certain opportunities to invest in gold and silver because the rally was so swift, should they think of this as an opportunity to enter into gold and silver prices at the current levels, or should one wait? Will there be some more fall from the current levels as well?
Well, this is exactly the question you asked me about 15 days back also, that let people live with the FOMO. Do not jump in because prices are rallying, because there are no major triggers which were driving the prices from 4,000 to 4,400, or maybe from 50, maybe say $45 onwards to $55 for silver. So now what we are seeing is whatever excess froth was there is now getting absorbed by the participants, and people prices have come back to equilibrium. we see that typically both these metals have a tendency to overshoot. And silver also from 50 to 55 was a very smooth run. From 4,000 to 4,300, 400 was a very quick and rapid run. So now that they are coming back to these parities of $4,050 or below $50, I see them little overshooting on the lower side as well. We see that the gold prices could come down to as low as 3,800 at $3,850 also. So that's about typically 5-6% down from here also. And for silver also, say we stand at about $47.5, and prices could correct to 44 and a half, 50, $45 also, which is another 5-6% from here. So in both these commodities, I see another 5-6% of fall. And given that rupee is in the trajectory of appreciation over the last couple of days or so, if rupee also tends to appreciate, then domestic prices could be even lower than what they are today.
Okay, so 5 to 6% of a fall from the current levels also is possible on gold and silver. So watch out for those levels that both on silver and gold that Navneet has shared. Of course, these are international prices. Could you also detail for all our viewers the local levels to look at and watch out for as well, which could probably give us a buying entry?
Well, silver typically is trading at around 1,45,000 currently. We expect that anywhere between 136 and 138 is a good level where you should be reasonably invested into silver once again. And for gold, I think this level could be anywhere between 112, 1,12,000 and 1,15,000. That's about 6 to 7,000 points lower than what we are today.
Okay, got that. So those are the levels that you need to watch out for. Since you do say that 5 to 6% lower, and that could be a good entry point, seemingly that you would still expect that in the long run there will be higher prices for both gold and silver, and that's something that we should play for once these prices cool off more 5, 6, 7% or from the current levels. So what is it that you expect if somebody enters, at the levels that you've just suggested? What can one expect on the returns?
Well, it's not going to be a V-shaped recovery. Let us understand that it's kind of a getting a A-shaped fall, but it will not be a V-shaped recovery. There will be bouts of correction. There will be some bit of rebound, and then price actually will go into a time-wise correction also. With the price-wise correction, we will see couple of quarters of no major returns in both these commodities. I'm pretty sure that that will bring some normalcy to the market, and that is when the next leg of upward moment will start. We've been maintaining a very positive stance in silver vis-a-vis gold. We expect that gold, in best case, in the next 12 to 24 months, can be up about say 8 to 10%, whereas silver is something that we are targeting $70, $75 in the next 2 years. And on the domestic front, it could be around 2,25,000, 2,30,000 also. So prices around 140, 150, and going up to targets of 230 to 40 will still be another 45-50% returns on your investment. So vis-a-vis gold, silver could be a better bet, and better bargain hunting levels at the current fall that we are witnessing.
Okay, fair point. I hope this has also helped you out, viewers, in understanding, how should you look at the outlook on both gold and silver as well. When it comes to gold vis-a-vis silver, Navneet, you've been maintaining for last 2 years whenever we have had a conversation on where should one really look at for a better investment opportunity. You maintain that it is silver that has more prospects to outperform, and that's what exactly we have seen pan out in this year. Silver has outpaced gold, and substantially and in a swift manner as well, and in the returns that we've seen thus far. Now going forward from here as well, do you see gold vis-a-vis silver? Silver still has a better chance to outperform?
Well, absolutely. I still maintain my stance that gold and silver, the last couple of months, people were living in FOMO, and that is what has added to the rally in the last few weeks. But I think gold, silver should continue to outperform some of the asset class that we are trading. And typically, silver has a better probability or better chance than outperforming gold and other asset classes also. I would like to add metals also to this list. Metals like copper, zinc, and nickel are something which one should be watching for the next couple of years, where you can expect reasonable returns of upward of 20-25% in both these all the three metals. And eventually stocks will also perform to a very large extent if the underlying metals start to run up. So I think
Okay.
metal is one space that one should be looking at now.
Okay, got that. So silver continues to be the asset class that will outperform gold between the two. And what we can also see is that a ripple effect could be seen of this precious metals rally into the metal space, hard metal space as well. Three particular metals that have been marked out by Navneet that could see a super bull run going forward from here. I just wanted to talk about silver one more, in one more point, and that's the recent sharp fall that we actually saw in silver ETFs, a one-day fall of 19% odd. That led to a lot of investors getting off guard. How would you explain what really happened there? And for those who have been investing in gold and silver via ETFs and not holding the physical gold or silver, what would your advice be?
Well, typically, there was a shortage in the physical market where silver was trading at a significant premium in the physical market. In most of the tier one cities, it was about 20 to 25, 20% premium than the physical market, and in the tier two cities, it was upward of 25, 30% also. So ETF typically works in a fashion where you invest money today, tomorrow they will buy physical metal and they will park in the warehouse. So all these ETF holders had to go and buy metal at 20-25% premium to what the underlying prices should have been, which led to a very massive spike in the ETF NAVs. Okay, and then what happens, then people realize that physical market is trading at something else and ETFs are at a significant premium. So there was an arbitrage opportunity which where you could have sold ETFs and bought it on the MCX and probably capitalize about 7 to 10% gains. And that typically led to a massive fall in ETF price where investment started to dry up and the NAV started to catch up with the physical market when the liquidity or eased out. So this was a very short term phenomena. In a matter of 10 days, all the premiums have got eroded and ETFs currently are perfectly priced as to what the underlying prices should be. So anybody who's now wanting to invest in ETF is a good opportunity. It's no more at a premium. It's is equivalently trading at a parity price as to how MCX should be or the domestic market should be trading. So either you could look to buy physical or you could look to buy digital. Works both ways.
Fantastic. Okay, last word from you, Navneet. We have begun Samvat 2082 with the volatility on gold and silver prices, but that is on the backdrop of a sharp, swift run up. By the end of this Samvat, where do you see gold and silver prices in the domestic market?
Well, silver will be anywhere in the range of maybe around 2 lakh plus kind of a level, 2 lakh 10,000 typically, or maybe $65 on the international is where we see silver prices. Gold at best could move once again towards a lifetime high of 4,400, $4,500. On the domestic front, it will be in the range of 1 lakh 35, 1 lakh 32, 1 lakh 35,000. We are not overtly bullish on gold. We are bullish, but not overtly bullish. Money should be made where it matters is silver, investment into silver or investment into other alternate metals like copper, zinc, and aluminum.
Fantastic. Thank you so much, Navneet, for being with us on the program and, of course, helping us with all your wonderful insights like you always do. Here's wishing you well for the entire Samvat year 2082. May it pan out to be a wonderful year, a prosperous one and a profitable one for you and for your loved ones as well as your clients. Thank you so much.
Thank you.
Thank you. With that, viewers, we wrap it up on that note. Gold and silver prices can correct further 5 to 7% from where they are at the current levels as well. Once that happens, there could be a good opportunity for you to really enter into both gold and silver. There is an expectation that by the end of this Samvat year, we could be heading higher once again as far as both gold and silver are concerned. But silver might continue to outshine gold in terms of returns is what the clear expectation is. Along with silver, it could be the hard metals as well that could give you an opportunity to make better profits too. So within that, I hope that you've got an understanding of what's really happening, how to read the current fall in the prices and what to look forward to in gold and silver as well. Stay tuned with us on Business Today Television. Of course, I'll be joining you for the closing edition on Market Today as well.